President Obama, of course, poised to announce today an overhaul of the financial system, a new agency to police everything from credit card markets to mortgage industries.
And many on both sides of the aisle say it's long overdue, but critics say the president is taking on too much, overwhelming a Congress already bogged down with health care reform, fixing the auto industry. We're going to hear from both sides this morning. But first, let's get to ABC's senior White House correspondent, Jake Tapper, details of the president's new plan. Good morning, Jake.
Good morning, Robin. Well, President Obama has already been criticized for his big spending proposals and for government ownership in private companies like General Motors and AIG. So his proposals to stave off any future economic crisis are surely to be controversial. He's proposing new government powers for the executive branch and a new government agency.
They're the most sweeping financial regulatory reform proposals since right after the Great Depression.
The goal is to integrate the system, make sure that there are not any gaps, and to make sure that we have a updating of the regulatory system that worked back in the 1930s but doesn't work with the kinds of financial instruments and the kinds of global capital markets that exist today.
There are three key parts. A new Financial Services Oversight Council, headed by Treasury Secretary Tim Geithner, to oversee financial institutions deemed too big to fail. Expanded new government powers, allowing the government to take over failing firms before they financially go belly up. And a brand new regulatory commission, the Consumer Financial Protection Agency, to protect consumers dealing with home mortgages, credit cards, student loans, and car loans.
When you buy a toaster, if it explodes in your face, there's a law that says, your toasters need to be safe.
Right.
But when you get a credit card or you get a mortgage, there's no law in the books that says that if that explodes in your face financially, somehow you're going to be protected.
Consumer groups applauded the announcement, saying if these new rules existed 5 years ago, we might not be in the economic crisis we're in right now. But critics charge that the administration is on a power grab.
It does begin to look like you're getting to a situation where there's no area of American life that isn't going to have an executive office bureaucrat dedicated to it.
The White House says it's difficult to argue after the economic meltdown that there should be fewer regulations, less oversight, fewer consumer protections, but the White House knows this is going to be very difficult to get this passed by Congress. Diane?
All right, Jake, our thanks to you. And we followed up on this a few minutes ago when from Washington we talked with Dr. Christina Romer, who's chairwoman of the President's Council of Economic Advisors. So as we heard Jake Tapper say, this could be a real challenge up on Capitol Hill, with a lot of people saying these enormous new regulations could intrude into every part of the commercial financial world, second-guessing the banks, the mortgage industry. What's your response?
I think the key thing to say is that the status quo is not an option. One of the things that we've seen from the crisis that we've been going through is that there were gaps, there were failures in our regulatory system, and we need to make it better. What we're proposing is an important overhaul, the biggest overhaul since the Great Depression.
If I can bring it down to the consumer for a moment, and there is one quote I noticed in the paper this morning saying that the consumer protections would in effect be deciding how people live, not just how people get to decide for themselves. And the question is, take credit cards alone. What will be new for the consumer on credit cards? What would you prevent? And does it mean that you can run up a high bill, a high debt on your credit card and affect government protection?
No, very much what the new Consumer Financial Protection Agency is supposed to do is to really watch out for all the ways in which consumers borrow. We have a lot of those regulations today. They're just kind of spread around to a lot of different agencies, a lot of different regulators. Very much what our proposal says is the consumer deserves one agency whose only job is to watch out for them.
Turning for a moment to health care, if I can, this morning, the Congressional Budget Office, as we know, issued a report which created kind of bombshell about Senator Kennedy's bill, which is the leading Democratic bill at this point, saying that not only, of course, would it be the huge cost over 10 years, but at the end of the day, you'd still have net 36 million people who wouldn't be covered. Even Senator Dodd said he was concerned and surprised by those numbers, and he helped draft the bill.
So, the crucial thing, last Monday, the president gave his vision of health care reform. And here I just have to tell you, do you notice how health care reform and financial regulatory reform sort of all go together? This is the president's theme of not only getting through this crisis, but coming through stronger, a new foundation for the economy. And he laid forth principles such as making sure we contain cost growth, expanding coverage, and put some very concrete proposals on the table.
Members of Congress, though, like House Minority Leader John Boehner, have said whatever is being said, the cost is unknowable and going to be astronomical. And there's a cautionary tale in Medicare. We went back to look. In 1965, everyone was told that over 25 years, the cost of Medicare would be $12 billion. The actual cost, $107 billion, 10 times what the estimate was. Can you know this cost, and can you guarantee it's not going to be more than the administration believes?
Of course you can't ever know the future. What the president, though, has said is we are absolutely going to pay for this thing. Any health reform that we do absolutely can't grow the deficit in the short run, and it needs to make the fundamental kind of reforms that will slow the growth of costs in the long run, because that's the thing that's fundamentally going to bring down the budget deficit eventually.
And joining us now from Washington with the Republican point of view is Representative John Boehner of Ohio, the House Minority Leader. Good enough to join us live this morning. Good morning to you, sir. How are you this morning?
I'm doing fine. Good morning.
Good. What do you think of the president's proposal for taking on the financial industry? Just want to get your overall thoughts.
Well, overall, there's a lot that we agree on in terms of the Republican proposal that's out there and the president's proposal. But if you look deeply into some of what the president's calling for, we'll have the federal government deciding what interest ought to be charged on credit cards. We'll have the president's proposal decide what kind of financial products are available. And I just think that the government involvement in the financial industry is going to be too big of a foot on an industry that's already having problems. I think at the end of the day, what the American people want is they want to know, how do I get my job back? How do I hold on to my job? And these kind of policies that we're seeing out of the administration are going to work to slow down job growth and prevent the private sector from growing and bringing people back to work.
But I know you heard Dr. Romer, what she said, that the status quo is not an option, that there were gaps and that there were failures and that something is needed to protect consumers from some lenders and credit card companies. How do you address that?
Well, as I say, there certainly are gaps in the current system, and we agree with the president that we need to fill those gaps. But when it comes to the development of new financial products to serve the American people, almost all of these would have to have an approval by some government agency before they're offered. And while there are numerous consumer protections already in the law, the question is just how big of a foot does the government have to play into the private markets in our country?
Let's talk for a moment about health care. The Obama administration argues that their reform package will ensure those that do not have insurance at this point and will cut costs. What's your response to their reform package?
Well, we agree with the president and want to work with the president to make sure that all Americans have access to high-quality, affordable health insurance. But we're not for the government taking control of our health system. And if you look at the leading Democrat proposals in the House and Senate, they have this giant government bureaucracy that literally is going to take over private health insurance in America. And if you think the post office is the model of efficiency, can you imagine what they're going to do to America's health care? We're going to unveil our plan today that will bring down costs, insure most Americans, and improve the quality of care that we have in our country.
Can you give us some highlights of what that's going to be, what you're going to unveil today?
We're going to make sure that all Americans have access to high-quality health insurance. Part of the way of doing that is to ensure that they get the same tax treatment as companies do today. So insurance premiums are deductible for people, whether they get their insurance from their company or not. Bigger risk pools in states for those people who have pre-existing conditions. Help for those who can't afford health insurance in the private market. But we want to take the current system and improve it to cover almost all Americans. We don't want the government to come in and Bigfoot this like they've done other things.
I know you're going to reveal more details later today. We appreciate you, John Boehner, Representative John Boehner, for joining us this morning. Thanks so much. Have a good day.